So you're buying two businesses. Tell us, what will these two purchases enable you to do that you can't do already?
Well, it's a core element of our strategy to grow in our logistics business and being able to sell more and more landside logistics services to our ocean customers. And we're doing very well. We grew at 38% in the second quarter year on year on logistics. With these two companies, we are increasing our capability in the fastest growing segment, namely e-commerce. So we will be able to offer our customers basically transport all the way from Asia in containers into warehouses in Europe and the US, and then the orchestration of the final delivery to the end consumer. So that's really the capability we're getting here.
So that's the capability that these deals add on. Let me ask you about your 2021 performance then, Soren, and what you see from here. I see you said that the Q3 outlook is strong. I was reading an analyst report that suggested that the second quarter was would most likely represent the peak in your 2021 performance. Does that sound likely?
Well, we're actually saying today that we expect the third quarter to be even stronger than the second quarter. Obviously, we are making very, very strong results now, helped by very strong freight rates due to the strong demand from after the pandemic or from the pandemic. But we are also executing very strongly on our strategy, and it's a combination of those factors that makes things look really good for us.
Let me stick on that subject then of freight rates. We must talk about that, Soren, because I know, of course, it's benefiting your industry. It's become an obsession of many people watching the global economy. What are the chances, do you think, that these elevated levels of freight rates last well into 2022? Because every quarter I talk to you and you say it's transitory, it will pass, and it hasn't yet.
Well, it's really hard to judge because right now there's unmet demand. The global container carrier industry is simply not able to lift all of the demand, and that's what's keeping the freight rates super high. One of the reasons, or the reason, is that our customers are trying to do two things at the same time. First, they are serving, if you will, very, very strong basic demand, which is driven by all of the stimuli and a strong consumer demand. But at the same time, many of our customers have very low inventories, which goes all the way back to last year, where they were not buying as much in the second quarter in Asia as they would usually do. And that combination of very low inventories that needs to be restocked and very strong basic demand means that demand is probably stronger right now than supply, and that keeps freight rates at these elevated levels. How long that's going to last is impossible to say, but of course, with our guidance and with what we're saying today, that the third quarter is likely to be better than the second quarter, then we expect at least it to last well into the fourth quarter.
OK, and do you have a sense of what kind of rates we will drop back to when we start to see these exceptional rates moving on, if you like, or things unblocking sufficiently? Any sense that this will become in some way, to some degree, ingrained?
Well, our view is that we expect rates to drop, but we also expect that the industry to match capacity to demand in the future, and therefore we will have a more healthy container shipping business that in the future.
You previously said that you see limited signs of rising global inflation. So even though you see, of course, these higher shipping rates in your industry, you don't look around and see a lot of signs of other inflation. Can you update us on your thoughts on that, Soren? Is that still the case?
Well, we are seeing. I mean, I recognize I said that 3 months ago, but we are clearly seeing some elements of our cost structure increase. First of all, of course, the fuel prices have gone up a lot since last year, and secondly, we are seeing that because there's such a strong demand, container ships, charter rates on container ships have gone up dramatically. We charter about half the capacity that we use, the other half we own ourselves, and clearly the leasing rates have increased significantly. So that is a cost inflation that we're starting to see in our network.
So you are starting to see some cost inflation. And how does the contract situation work, Soren? How much are you able to pass on those costs?
Well, we have, during the pandemic, really tried to protect our, if you will, long-term customers, those that are partnership oriented, and have done a very good job of that. And the contract part of our total book of business have gone up, and it's now at around 60% at the long haul in the long haul trades. That means that our customers, are willing to sign up for longer contracts at higher rates. And at the same time, these customers, the large customers, are buying much more logistics services from us, which is one of the reasons for why we have the very, very fast growth on landside logistics.
And Soren, we've talked quite a lot on this programme about green initiatives, trying to green many parts of the economy and the logistics side of things, and certainly the shipping industry is focused on this. I know you and others in the industry have been calling actually for a tax on your own operations, a tax that would take account of the sort of dirtier fuels and tax those. Do you get any sense of movement, any sense that this is happening in any jurisdiction?
Well, I mean, obviously, the EU, as part of the Fit for 55 package, is planning to have a carbon tax also on shipping. Shipping has the one huge advantage that we are globally regulated through IMO, the International Maritime Organization, under the United Nations, and that's really where we should have the regulation. And we are calling on all of the countries in the UN to really use the IMO to think about how we can create a transition to zero carbon fuels. We actually know what fuels that we would like to use in the future. They will be significantly more expensive than what we use today, and therefore over time we need to tax the fuels that we use today in order to help the transition on the way. Otherwise, the difference between old style fossil fuels and zero carbon fuels will probably become too big.
What's the block or what's the difficulty in moving faster, Soren, to that end goal then? What stops the industry moving quicker?
So the IMO, the advantage of being a globally regulated industry is clear, but it also means that the 180 countries need to agree on one direction and in the UN, and that's obviously not that easy. There are some countries that are very ambitious on the green agenda. There are some countries that are very much depending on oil production, which are less ambitious, and so on. And all of these have to come together in one compromise, and that takes time.